So it seems like the whole world has caught the travel bug again. And one airline isn't just along for the ride, it's absolutely soaring. Japan Airlines just dropped this spectacular quarterly report, with profits more than doubling. So how'd they do it? Is this just a lucky break? Or is there a really smart strategy powering the engines? Let's break it down.
All right, here's the flight plan for this explainer. We'll start with the big picture of why JAL is flying so high. Then, we'll decode those record profits and find out what's really driving the growth. After that, we'll look at how the company links pay to performance, and finally, we'll check out their map for the future.
Okay, first up, let's set the scene. You really can't understand JAL's incredible success without looking at the world they're flying in right now.
I mean, the main story here is pretty simple, right? After a few crazy years, people are traveling again. And not just a little bit. There's this huge, sustained global recovery, and that's creating massive opportunities.
And for Japan Airlines, this is more than just a general trend. It's like a perfect storm of good news. You've got tons of tourism pouring into Japan, which is huge. But the other key thing is that business travel starting from Japan is bouncing back way faster than anyone even hoped for.
So, what happens when you're in that perfect environment? You get a number like this, a truly staggering one. JAL's core profit for the quarter more than doubled. It jumped an incredible 105.7% from last year. Now, a number that big just makes you ask, where on earth did all that money come from?
Okay, so let's get into the hard numbers. This is where we break down the financial results that are making all the headlines.
Now, before we look at the table, let's just clarify a key term here. JL really focuses on EBIT. That's just earnings before interest and tax. The easiest way to think about it is it's the pure profit from the main business, without all the tricky financing and tax stuff getting in the way.
Okay, now these numbers, wow. They tell a really powerful story. Revenue is up a super healthy 11%, net profit nearly doubled, but the real showstopper, the headline grabber, is that middle line, EBIT. It just exploded, going from 22 billion yen all the way to 45.5 billion. That is a massive, massive jump in how much money the core business is making.
And it's one thing to hear the number 105.7%, but seeing it like this, it just drives the point home. Last year's profit bar is completely dwarfed by this year's. I mean, this isn't just a little bit of growth. It's a monumental, record-breaking leap.
So it's crystal clear they had a record quarter. But a company as big as Japan Airlines has a lot of different parts. So next up, we're going to pinpoint exactly which parts of the business are firing on all cylinders.
Yeah, this is the key question, isn't it? Was it their fancy international flights, their domestic routes, or maybe something else entirely? Let's find out.
This chart pretty much gives us the answer at a glance. The traditional, full-service airline is, no surprise, the biggest piece of the profit pie, bringing in a whopping 30.7 billion yen. But look closer. The other segments, their low-cost carrier and the Miles and Commerce division, are also serious contributors, kicking in over 14 billion yen combined. Now let's zoom in on the actual flying operations. What's cool is that both are doing incredibly well, just for different reasons. The main airline saw its profit nearly quadruple thanks to that high-value international and business travel we were talking about. But at the exact same time, their budget airline segment, including their long-haul brand Zip Air, almost doubled its profit, just by being smart and nimble with its routes. It's like a one-two punch, and it is definitely working. So, record profits are fantastic, but they bring up another big question. How does a company make sure this kind of success keeps happening? Well, for JAL, a big part of the answer is found in how it motivates its top leaders.
Yeah, this kind of performance absolutely does not happen by accident. It's the result of a clear strategy that's backed up by some powerful incentives. JL has figured out a way to directly tie its long-term success to how its executives get paid.
The system they use is called a Performance Share Unit, or PSU, and it's a really powerful idea. Instead of just giving a cash bonus, executives are promised company stock in the future. But, and this is the critical part, they only get those shares if the company hits some really specific, ambitious goals over several years.
The whole process is really straightforward. First, JAL sets clear 3-year goals. Then after those 3 years, they measure how well the company did. And finally, they award stock based on that performance. The real genius here is its simplicity. It makes sure that the personal financial success of the leadership is directly tied to the long-term health of the company.
So what are they actually aiming for in the next cycle? Well, this is where it gets super interesting. Of course, you've got the standard financial targets, like shareholder return and return on capital. But look at the other two. Executives are also going to be judged on how well they reduce CO2 emissions and whether they get the company into major ESG, that's environmental, social, and governance indexes.
And that right there is the key insight. By literally baking environmental and social goals right into how their executives get paid, JL is sending a loud and clear signal. They're telling their leaders to build a company that's not just profitable today, but is also sustainable for the long, long haul.
So after flying through a record-breaking quarter and a really smart corporate strategy, where do we land this thing? Let's bring it all together.
Okay, so here's the whole story in a nutshell. Zhao perfectly cashed in on the global travel boom, using both its premium and its budget airlines to drive growth. But this isn't just about one good quarter. They've built a real long-term strategy, a flight plan where the leadership is paid to create lasting value, balancing profits with really important environmental and social goals.
It's a really impressive strategy, but we all know the airline industry can be incredibly turbulent. You've always got things like fuel costs, crazy competition, and global events just waiting around the corner. Which leaves us with one final question. With such a clear flight plan and a highly motivated crew, is Japan Airlines cleared for a smooth climb to even higher altitudes, or is there some unexpected turbulence ahead?